welcome traders to our midweek technical analysis video. So jumping straight into things from where the market opened up. If you remember from our last video, we marked in this horizontal ray, this purple line that you see here, and that was where we expected price to move to, at least to move to upon market open. As you can see, we had a gap in the market indicating there was a number of preemptive longs within the market, causing price to have this sort of gap, as you can see, and price to push above. So as you can see, price did in fact push above this this most recent all-time high, and you can see that price went on to create another all-time high. You can see that we had some slight consolidation on the lower time frames throughout sort of the entirety of the Monday. We saw major consolidation throughout most sessions until sort of late New York session, where we saw this big drop down to a previous level. As you can see, this previous level is roughly testing this area here as a support, so we got a break and retest. From there, then you can see price continued in a bullish fashion. Price continued bullish all the way up until its most recent all-time high of 5,311, so a significant increase from the all-time high that was created last week. So what does this say for gold, and what could we expect to see in the coming days slash coming weeks? So first things first, what we're going to do is we're going to work sort of bottom to top, left to right, and mark in any points of interest that we see fit. First point of interest that I'm going to mark in is this area here. As you can see, price created a all-time high here and then consistently tested this area as a resistance. Now there is a lower time frame POI or point of interest here, and that will be somewhere around this level. So as you can see, this area here was the overall support area, and we also saw sort of head and shoulders patterns formed. I will show you the head and shoulders now on our minute 15 time frame. So we had our left shoulder, our head, and then our right shoulder, and then obviously we created that overall neckline that eventually got broken through. As you can see, price sort of tested in and around where the neckline would have consistently stayed throughout into the future, and as you can see, eventually price moved away from it. So minute 15, we have that point of interest, marking it just from this low down here. So just like this, bottom of the candlestick all the way down to the exhausted wick, and then as you can see in the future, we can see that price has reacted off of this level as both support and resistance, indicating to us that it is something that we want to take into consideration in the future. One thing I will do is just make sure that this only shows up on the minute 15. Our next level is going to be simply the most recent all-time high. The reason for that being is it is the highest most point within the markets as of right now, and that is the highest point that we can expect price to move to if we do see a bullish push until it goes on to create a new all-time high. As you can see, we are seeing some sort of a bearish rejection off of this all-time high since it has been created. We have just seen some economic news. Some news has taken place today. I believe we have Fed interest rate decision and Fed press conference later. We already had FOMC, which I believe is the reason for, if I go to our minute 1, which I believe is the reason for this sharp drop here. I think it was FOMC. Yeah, most likely. You can check our economic calendar in our analysis channel for that, or our main channel. So as you can see, we obviously saw that big bearish drop. News is news, and news always, not always, but most of the time will go and correct itself. What you can see from here, if I grab the brush, you can see that price is forming some sort of a higher high, this being the higher high, and then this area being the higher low. So we can definitely see that taking place now. And we can see by just simply off price action, if we was to not know any information from previous, and this is all we saw, we can see that price is being exhausted, and you can see that from the wicks below these candled bodies, or the bodied candles. So what does that say for gold? What could we expect to see? So overall, if I go to our daily time frame, you can see that overall today, sort of since last week, we've seen continued bullish momentum. We have seen continued bullish momentum for the entirety of gold, but this is a significant push. As you can see, there are no bearish days. The only rough bearish day is this candlestick here, but basically was a fight between the buyers and sellers, and no one really won, so it was sort of a draw, if you will. But as you can see, straight candlesticks, straight bullish candlesticks, days on days, finishing in a bullish fashion, finishing higher than the previous. So there's two things that this tells us. It tells us, one, that the bullish momentum is very strong, and the volume within the market that is from the buyers, and the overall positivity around gold right now is very strong. However, with every rise comes a fall, and there will definitely be at some point a bearish day. And could that potentially happen where we are now? It's likely, but not as likely as we'd like. For example, like I just spoke about, you can see these exhausted wicks. So for us to sort of start looking at a possible bearish flip or a retracement potentially back down to this level here, what we'd need to see is we'd need to see price or a candlestick finish anywhere sort of where you can see these candlesticks are exhausted to, these wicks. If a candlestick closes, so the body of the candlestick finishes anywhere sort of in and around this area here. If I just mark it in for you real quick so you can see, because I figured there's quite a lot that goes on in my brain, but my brain is not your brain. So that's what I'm looking at. If a candlestick finishes sort of like, for example, let's say this next candlestick, it might happen in this candlestick, but let's say this next candlestick finishes, the body of the candlestick finishes right here, right? Then we'll go ahead and expect price to potentially continue bearish. However, it could just be market manipulation. It could be a whole bunch of other factors. But yeah, that's definitely a potential in the market right now. However, the overall bias for gold, I think, definitely in terms of probability, leaning definitely more towards a bullish market. There's no reason for price to short off or sell off right now, so we're just going to continue to expect new all-time highs created with higher highs and higher lows moving all the way up, until we do see those bears step back into the market and potentially basically the main thing that will change the direction of gold right now is the economic and political status of the dollar. As you know, obviously we spoke about it in the last few videos, Trump is making advancements towards Greenland, and that is having, along with some other things, but the main thing obviously is that Greenland movement, and that is having a negative effect on the US economy, therefore has a negative effect on the dollar. So the dollar's price or the dollar's strength is weakening, and therefore people will go ahead and resort to gold. So as it goes for our midweek technical analysis, pretty much it. We've covered everything. We've marked in our new points of interest. There will be lower time frame levels. For example, we can mark in this level here as a little bit more in detail. Obviously, we do have this area in our hourly time frame, but obviously we can mark it in a little bit nicer on our minute 15, just in a little bit more detail, like I said. But there's no real significant area. Like you could potentially say, okay, let's mark this area in, but there's no place within this area that price is tested as both support or resistance or both consistently. You might ask, well, price hasn't really tested here very, very consistently, but that is the all-time high, so that's why we mark it in. So yeah, that's pretty much it for our midweek technical analysis video. I hope you've all enjoyed. Remember, do not forget to comment on the videos. We had, I think, 2 comments on our last video. Really appreciate it. Saw them. I think I liked them. Apologies if I haven't, but yeah, I saw them. Don't worry. I really do appreciate the feedback. We just reached 700 subscribers a few days ago as well, so a huge thank you to all of you that have clicked that subscribe button. If you are watching right now, be sure to subscribe, turn that bell notification on so you don't miss out on the next video. But yeah, that's pretty much it for our midweek technical analysis video, and I will catch you in our post-week market review.